All right. Thank you, David, for having us here again. This week or this month, it's the Fibonacci and Elliott wave analysis event. It's always something fun to kind of go over. My name is, for anyone that hasn't ever seen me before or seen a presentation I've done, and I do apologize that I don't have a video up so you can show my face. We are in the middle of moving, but my name is Matthew Timpane. I am a chartered market technician, and I'm with Schaefer's Investment Research, and I'm a senior market strategist over there. I've been with them since, oh, what is it now? 2018. So going on 7 years, a little over 7 years now. And we're based out of Cincinnati, Ohio. We have been around for 44 years providing options research. It's literally the longest in the industry, helping retail and some institutional traders with option trade analysis and trade ideas. We've been around, we have a big team, and I mean, this is what we love doing is we love trading and really our big focus is options. So if there's any questions, how you could structure things like that, I will go over some of that, but feel free to ask it, if you are into trading options. Otherwise, I got extensive experience. I was before a portfolio manager and partner at a registered investment advisory firm where we handled a multi-strategy active portfolio for our clients. And we did about 7 models. So, I mean, I've done everything from conservative investing to, aggressive investing, high yield, even a bond portfolio. So, um, feel free to ask anything about that or about technicals and, in the chat area if you'd like. All right. So today we're just going to go over how to use Fibonacci levels for trade ideas. And it's a little bit of a rehash of last year's, but there's some new components to it. And obviously, we're going to go over a bunch of new charts. So it doesn't really change a lot, right? Like, Fibonacci analysis is kind of the same, and that's really my focus. And here is why. Let me just get the clicker going. All right. So I believe in fibs over wave analysis a little bit. I'm not saying that Elliott wave analysis doesn't work or anything like that, but for me, I have some issues, and I just kind of like to go over it. I think Elliott wave is much more subjective, and it does work for a lot of people, but you're interpreting wave structure and counts is subjective and has a high variation among analysts, right? Like not everybody's going to have that same count and there's going to be different interpretations. It doesn't specify timing or magnitude. In my opinion, it's not really that useful without actionable risk price levels. Needs to be combined in it. Um, there's also frequent revising of wave counts as new price data emerges, leading to frequent changes of opinion. So this kind of undermines consistency, in my opinion, which I think is paramount to being a profitable trader. A lot of what we do is we quantify and backtest things that work, or at least that we believe that could work, so we can see how it works. And we found all kinds of variability, right? Like certain stocks rhyme to certain moving averages. It's not just a kind of hey, the 200-day always works like this, or the 50-day always works like this. It's just not like that. There are certain stocks that like unique moving averages, like the 80-day, and or like the 126, and they all have meaning, right? Like the 126 is really kind of just a 6-month moving average. Um, we found that there isn't no rhyme, no reason to which stocks are doing this. It could be AMD and Nvidia, and they have different ones that perform so much better, right? So they're both semiconductors, but as we know, they act really differently at times, and at times they're actually highly correlated. So that's one reason why, as well, with Elliott Wave is just not my thing. Looking at past studies, and then in one in particular that did both Elliott Wave and Fibs, so not pulling one or the other. There is real no edge in either as standalone versus buy and hold. And I know this conference is about to use them, and that's my point here is how to use them the correct way. The study was done across currency pairs from 2005 to 2013. There was some mild positive results combining the two, and also some positive mild outperformance when using objective parameters for fibs that I've been able to find. But neither of them was significant, right? Like you're just gonna have this wildly outperformance in them. Again, this is not to say don't use Elliott Wave. Um, if it works for your process, I mean, continue using it by all means. I do still believe that there's a wave structure within trading markets and price. Um, but use it in confluence with other things that can be quantified. As I discuss later, even with fibs, which are much less subjective in my opinion, and more objective, I still use them in confluence with other drivers. So that's kind of just my spiel on how we're going to look at this. It's a little bit different than maybe some other people, and everybody has their own process. I mean, each person kind of looks at things differently, and and have success differently. So. Um, if nobody's ever kind of put this out there yet, Leonardo Fibonacci is the founder of the Fibonacci ratio and sequence. His real name was Liber Abici, aka Pisano, or of Pisa, but he did go by Fibonacci, right? So he is the guy, and there is a statue even of him. And I know it's pretty far to get to. And, oh, what was the building in Italy? I can't remember. I had a buddy go there, and it took him forever to get to it. But there is a statue of even Leonardo Fibonacci in Italy, in I believe it was Rome or Florence, one of the two areas. So something I'd like to go see at some point. He was there, and nobody was by it. But Leonardo Fibonacci was a mathematician, and he posed the question: how many pairs of rabbits placed in an enclosed area can be produced in a single year? From one pair of rabbits if each pair gives birth to a new pair each month, starting with the second month. And he published this work in 1202. So a long time ago, the Fibonacci ratio came about. And just to give some backstory of it, the Fibonacci sequence goes like this. 1 to 1 is 2, 2 to 3 is 5, 3 to 5 is 8, and so on. And it keeps going. And it's the sum of two adjacent numbers in the sequence forms that next higher number. Um, the ratio to that next higher number is approximately 0.618 to 1. So 0.618 is, one of the kind of golden ratio. 1.618 is technically the golden ratio, but 6.618, when we're looking at golden ratios in trading, that's one of the most prominent, obviously, retracement levels that we look for. I kind of look at it a little bit of a different way. I kind of look at it as like a golden zone where I'm looking between the 50% retracement and this 0.618. But we'll see that too. So the next lower number is 1.618 to 1. And then further along the sequence you go, the closer the ratio approaches to that 6.18 ratio. So as we get along into the thousands, it keeps just tightening up. And then if you do alternate numbers, that ratio is approximately the 0.382 and the 2.618. So it's the inverse, right? And the inverse of that 0.382 is 2.618. So this is where we get those extensions from, the 1.618, the 2.618, you get the 3.618. Those are the inverse. Now the ratio is, we trade the 23.6, the 0.382. These are all levels within that retracement, as well as the six. Well, I usually do 61.8. I use it as a percentage, or 78.6. So that's just the math, how it works. And the golden ratio really can be found in all kinds of things. It's not just trading. It's not just, if you've done any research on it, it's literally in all forms of life out there. You can be found. It can be found in leaves. It can be found in seashells, pine cones, pineapples. The spiral that a hawk makes to catch its prey roughly goes in that sequence, that same golden ratio sequence, um, to catch that prey. I mean, it's crazy, right? Chameleon tails is another one. I mean, that was something that I thought was kind of crazy. And to your own body has, the sequence embedded in it. So Why wouldn't it be found in price behavior? It makes a lot of sense. It's a sequence or a cycle after all. Obviously, we know they're in waves as well in the ocean. And that's the waves metaphor to how price works. Is very kind of, I would say it's fairly a good metaphor, right? Like price typically works in waves. We get corrective waves, and again, like I said, that's why like I'm not like a hater on Elliott wave. I believe things work in waves. I just think some of it's interpretable. And I think that there's more randomness to it, right? But below our examples that we have here, just of numbers within the sequence, right? For fun, just go ahead and run the sequence yourself, and the math will always work out the same anywhere along the timeline, really. You'll see it, it's kind of crazy. So, just a classic example of 610 plus 987, equals the 1597. And you divide that by that 987, you get the 1.618. And, if you do the inverse of it, 987 divided by the 1597, you get the 61.8. So just wanted to kind of lay this math out there for you all so that you can see it and play around with it. It's kind of fun. If you're a little bit nerdy about math or anything like that, it's a fun experiment to kind of go through. All right, for me, Fibonacci levels mean a lot different than some other things, right? Like I'm not just going to use them as standalone, and I've went over this already. They are areas of interest to me. By areas of interest, I mean this is where I'm going to start looking at, where I'm going to find potential support areas, potential, areas that, hey, you know what, it's picking up on my radar. We've pulled back enough, or maybe we've ran enough to an extension that, I might want to exit a position. So to me, it's areas of interest. It doesn't mean to act on it. It doesn't mean to go all in. What I like to do with it though is use it in confluence with other indicators, right? And I'm not even the biggest indicator guy in the world. I do look at moving averages. I look at, major areas of support and resistance. And I think using, some combination of this for however you want to trade, is very beneficial. Um, moving averages, just even if you use the standard ones, you're going to see it when we go over some charts here that you're going to see confluence. All of a sudden we got this pullback to the 50 or the 61.8, and it's near the 50-day moving average. And that's, you start building up these drivers, right? And then, or maybe it's a major area of support and resistance, whether that's on a smaller time frame or a bigger time frame. It's areas that we've seen support or a pivot before. The anchored VWAP, I like using that. Kind of tells me, hey, this is where the mean of buyers have been along a certain set period of time, whether that was from an event or that was from year to date. It tells you an idea of like, hey, this is where the mean average of price is kind of located. And they're either going to defend it or it's going to break down, right? Like if you're trading on the long side, and the opposite if you're trading on the short side. And there's ways that you can use that. You can use those from highs too. You can use those from lows. Like I said, an event, you can do year over year, year to date. If you're trading shorter term, obviously you have the standard VWAP, but you can anchor back 2 days, 3 days, and you'll see how you can find areas of confluence on pullbacks around some of those VWAP levels as well. Round numbers, it's a psychological thing. There's no reason for it. It's not like, oh, all of a sudden it hit 100, it's expensive, or 200, it's expensive, or it's cheap, or however you kind of want to look at it. But um, round numbers is just a psychological thing that's stuck in traders' minds. And I don't think I mean, maybe that will change more as we move more towards automation, and the machines don't look at round numbers as much. But a lot of these things are already programmed in there, and who's programming the machines? Humans. So round numbers, we have the old Livermore kind of theory, right? Like if it pushes through that 100 level, you can probably expect it to move about 10 points higher. And that's just an old kind of trader, position on that, right? So we think in those ways, and I have this feeling we're going to end up programming a lot of our automation, which is already out there, in that same manner, right? So if it doesn't reject at that round number and it pushes through, you're probably going to get at least another 10-point move or something, on average, right? Um, Open interest levels. This is something I discussed at one of the other conferences. This is kind of my bread and butter thing, because not everybody's looking at them. They're starting to a little bit more. We're starting to get a lot more providers out there that are giving key open interest levels, obviously, with the GEX and peak calls and put walls, or I should say call wall, I guess. I call them peak calls or peak puts a lot of the time, but so I use those interchangeably just for anybody. But open interest levels, a lot of the times, yes, they also are in confluence with something else, whether that's a moving average, a major area of support and resistance. Maybe they're anchored VWAP or a round number, but sometimes they're also kind of hidden from people that are just looking at the technicals. If you're not looking at open interest option levels on a certain security, a lot of the times there's going to be an area where you're going to have this put support build up. Now, it's just like anything else. You break that level, you could have what we call like a delta hedge situation where you're going to start running those walls, the levels lower on the put level or higher on the calls, right? So they also just kind of acts as a different way of support and resistance. But I like to use that in confluence with fib levels. I mean, that's another thing. Like, hey, if you have that in confluence, you got some more support there. For me, I like to just keep it simple. Like I said, I'll use a lot of this. My charts aren't, I'll have a moving average thing on there. I'll be able to check it off quickly, if I don't want to see it and just have a clean view of charts. A lot of the indicators on the side if I want to pop them up quickly, but I do like to keep it simple. Um, and well, actually, so don't use a bunch of indicators. It's fine to use RSI. It's fine to use stochastic. It's fine to use MACD. But when you do too much of it, it just litters your charts. So I always like to give a simple reminder of that. Because what it does is kind of cause this analysis paralysis, and price is what really matters when we're trading. We use retracements to find an area of interest of a counter trend move from a larger up or down trend. So that is how we use these retracements. And extensions, we really kind of look for those for targets on the upside or downside where price could move towards. Fibs really can be used on any asset class. It really doesn't matter. Stocks, ETFs, indices, currencies, futures, crypto, um, commodities. I actually have one in the list to show you, which honestly, it might, crypto, I guess, go back to crypto. That honestly might be the most pure trade on technicals alone, since assigning value is very difficult to almost, really downright impossible in most cases, right? Like, you don't know. I mean, we're starting to get more in the crypto space where we can start putting valuations on because products are being built behind it. But we're still a ways off, and it still trades, much better based on a technical, behavioral aspect, right? So you're going to see fibs, I would say, in the crypto space work a lot better. And I don't have any in the list, but maybe we'll just pop something up and we'll see what we can find as well. So to go back, there was one thing I did miss on the anchored view app. Just looking at my notes here. Another one is IPO. So the anchored view app from the IPO level is another great one to use if you're not familiar with those. So as we know, things really just they don't go up in a straight line. Neither does it go down in a straight line. So typically we, stair step, whether that's higher or lower, which means there's corrective moves within a larger trend. You can see it all the way from a 1 minute chart to a monthly. And if you really want to kind of get extreme on that longer term end, quarterly or yearly time frames, you see these waves develop throughout time. You know, this is a chart of Palantir, one of the best performing names of the last year. And, nothing is straight, so um, strength of an uptrend really can be, I think debated when you're looking at these corrective moves. Um, you know, lot of the times, I think when you get like those pullbacks that are very shallow, the high tight flags, those are, often that 23.6 and the 38.2. On here, I only usually use the 50 and the 61 myself, but a lot of those more shallow dips that maybe pull back to like a 20-day moving average or a 10-day in there. Um, those are often those shallower ones. That trend is much stronger. Um, and then how I kind of look at it is I look to find, more of directional bets kind of around this 50 to 61.8. You can also look at them at point 0.7 or the 0.786 levels as well. However, these levels still very much, are tradable. The one thing that I will always say, kind of a caveat with this is when we're pulling back more, especially more than that 50% level, um, a lot of the times you can't have the expectation that you're going to necessarily go back that 100, back to that previous high. Um, I kind of like to look at it like this. The trend is really strong in the shallow, 0.236 and the 0.382 levels. But when we pull back to the, zero point 0.5, 0.618, 0.786, those moves will typically be more violent when they are in your favor. So the mean reversion of that move is greater, right? So they're much better levels to take like a shorter term trade from. I think the moves that, in over time, just through analysis of my eyeballs, haven't quantified this, which is something I should actually do. When we get these shallow ones and they continue to go in your favor, they're not usually as aggressive, right? Like you just go get this more of a melt up kind of situation. I'm gonna guess, if you for some reason were looking at something over here, you had this earnings event, right? And you got these pullbacks, like right here is probably that's probably a 0.236, 0.382 if we're looking on the chart here. But and then you see you kind of get this, okay, so it was a high and tight flag, pull back to the 20-day moving average. I mean, we could pull it out when we go to trading view here. And then you kind of grind higher more. Nothing wrong with those. For me, I do longer term trading for like anywhere from 30 to 90 days, where that works decently well. Otherwise, a lot of my trading is within like a 5 to 10 day window. So I'm looking for those very volatile moves, which is why I mostly have these nice big pullbacks because I want that mean reversion. All right. And we actually did trade this recently. So this was something I actually just had in one of those 5 day programs. I kind of saw this structure right here when we're looking at it, looks like a bear flag, right? But you're pulling into that 50-day, you got this 10-day kind of coming down. And once we break the structure of this 162 kind of level here, that was like if you look like it, pull it out on or pull it down into an hourly time frame, you can see that's like a range high. We broke out from that. We got into this position. This was the Monday that we got in. We kind of chopped around a little bit. Wasn't the plan. You had the Fed, so you got the big pullback. But where did it kind of bounce from? It bounced right from that structure of that range low, right near that 50 fib, and then we took off into Friday, and we were able to get a good gain out of it. It was over a 200% gain for our subscribers, in a 5 day option that we almost thought was worthless, but hey, the structure held up, and we got the move into OPEX, which is September's, triple witching, one of the biggest, uh, you know, um, options expirations every year. Right now, basically every big quarterly expiration is the biggest of all time because the options market is booming, and more and more people are trading options. But September is always huge for pivots and turning points as well in the market. Um, so it was a nice trade. Subscribers were happy with it, and as you can see now, right now we haven't quite made it back to that 100% retracement. So even if, like, say, you would have taken a 2 week contract on that recommendation, you can see oftentimes a little bit more difficult to get back to that previous high. But you do get these kind of violent moves, right? All right, this actually I used from last year's presentation just because it was so beautiful, of how it worked out, and it's on a weekly time scale. It still kind of holds true. I mean, we obviously broke out from it, but I think it's just a great example. This chart is from 2022. high to the low fib extension in the S&P 500. So you can see back here, this was the high to the low. So through that correction of 2022, we were able to look at how the fib levels worked, right? Like on this move back up. And I think it worked really well. So you kind of came back up. You see that first move off those 2022 lows. You came up to that 50% level. I mean, even so, you came up to the 38.2, you came back, dipped back down, right? And you caught that other kind of fib level in the sequence. But the 50 is what I'd be watching, and then you kind of you got the pullback again, and then you came back to this 50, and then once you broke structure and closed higher on a weekly basis, past these wick candles here, you can see, you kind of a little bit of chop around, but once you got a little bit of confirmation, we took off higher. This I'm going to guess is probably 78.6. I didn't have it on this when I did it. But I'm going to guess it's right around that area, right? And then you kind of got into some overbought territories, pulled back down. Where did you pull back to? You pulled right back to that 50 fib level that you were working on. So, and then we came back up to that 100%. And then coming out into 2024, we broke out. So you can see this is anchored VWAP for that year as well. And then where do you kind of pull when you're using this as pullbacks? Came right back to that anchored VWAP. So this is why I use things like that. And then we came up to the 161 uh, or the 161.8 level here. So, and you can see we got stalling action, pull back to anchored VWAP, came back up again, stalled. These are, it's not an immediate sell when you get to these levels. Sometimes it's stalling action, sometimes before it just takes off again. Sometimes you do get that pullback. So they're areas of interest, right? So you can gauge your trading. You're not going to do it. It's not going to pull back every time, and it's not just going to stall out and take off every time. But these are areas of interest that so that you are aware of where the market is within the structure. And again, you should be looking at it from all time frames, especially when you're in that area. So, break it down to the daily, break it down to the weekly, especially for swing trading, and then look for, triggers on, maybe shorter time frames like the hourly, or how I like to use the 65 minutes. So then I kind of get rid of that half hour bar out of there. All right. Is there anything else? All right. Nothing else on that one. So why fibs work? Uh, I haven't went all the way, like I said, down the rabbit hole of wave components, and I think, like again, I don't like how to you interpretive Elliott wave is, but I do think there's a wave component. I don't think they're off on that. I think there's 100% a wave component. Um, we all can agree that price kind of moves in these waves, right? Which is, like I said, kind of funny. It's that I'm not an Elliott wave, person, but I do think there's a wave component. Obviously there's I think rogue waves and things like that come out of nowhere. But I just think waves are much more random and they just really don't adhere to certain rules. Even one that has flexibility and adaptability to the rules, I guess it's just not for me, right? But if you wish to understand, I think the universe, think of energy, frequency, vibration. And that was said by Nicholas Tesla, right? It's a natural law. We kind of work in that. I don't think price works any different, right? The vibrations, the frequency, the energy, you can tie that to herd mentality as well. So, think about that. You have the beat of the drum, the herd that's coming. Uh, Investors and traders act no differently than that. That's how you get people on one side of the boat eventually, and you get that opposite move, right? So from the contrarian perspective, because what happens is, I mean, everybody's starting to go towards that, vibration, that frequency, that energy. They're moving all there, and eventually you're going to have a snapback, right? So I think, that's just the way the world really works. Since humans interact with the markets, I think it's, really kind of a controlled chaos of how we work within the markets, because we are millions of people that are, in the markets that are trading, from institutions to people that are brand new. Um, So it's really like this controlled chaos kind of situation where, you're going up against the best of the best. So you got the Michael Jordans out there, and then you got the people that are literally, kind of say that what you would say that they're in like kindergarten sports because they're brand new, right? Like you have to start somewhere and you learn. Um, so it's an interesting aspect when you're trading the markets and you think about that. Um, Ignored levels, you know, how I kind of like to look at this is if price just blows through an extension and then holds the level on any kind of retest, and we're going to see this in the charts, this is a sign of a very strong trend usually. So this is something you're going to want to watch if it holds and you kind of get that turn. This is something you're going to want to expect. Hey, it's probably going to start moving towards that next extension level. This is something we can hop on. It may look like it's overbought, but it's probably not yet. At some point, it will turn, but that's just the nature of trading with the trend and momentum. All right, option strategies for fib levels. I think these are kind of the ways you want to really kind of look at them. Um, you could structure some iron condors, if you think you're in a big range between the 0 and the 100% retracement level. That's not really my style. Um, I don't mind selling premium. It's really tough for me to do the neutral, right? Like, and there's ways to do it that you can make it so you can turn it into a bullish trade. But for me, I think it's directional at the money, short and long term, also directional in the money, short and long term. And then credit and debit spreads you can use at the levels as well. And then straddles. Example, I think for straddles, especially, I think hold true to either the 78.6 or the short-term retracements like the 38.2 or the 23.6. And the reason for this is because, those shorter term moves, I think, those high and tight flags, we've all seen it before. We get faked out. We think it's a high and tight flag. We buy in, and you either get the move higher that grinds higher, or you get a collapse in price structure. So I think a straddle is a really good reason for that at those levels. And then the 78.6 too, because 78.6 is known as the last line of defense. And you either get the reversion move higher, like I said, that we just showed on PLTR, where you might not get back to the 100%, but you get this reversion move higher. It's typically violent, or you get a full on, breakdown that could happen. And if it busts through that full retracement, you're going to get a big move out of it. And that's basically straddle trading. You want to be able to, collect money. You're trying to collect hit your targets on volatility. It doesn't matter the direction, you're just looking for a volatile move. Now we are about halfway through this, so I'm going to just throw this up here for everybody. And then after this, we're going to go to the charts. But we have our quick hit trader program. We are doing a special today for $9.95 for 1 year. It's 10 to 12 simple options buy alerts. Some of them are just directional at the money, directional in the money, but then we also have straddles in there as well. And we're just looking to get, these are quick hit trades. So we're in and out of them within, anywhere from a week to a couple weeks. I believe even our overnight trader might be in this one, if I remember correctly. And that one is literally overnight, in and out. So all trades are delivered via email or an SMS. And we do provide you the targets. Yeah, and in as little as 8 trading hours, so OT is in there, overnight trader, and then featured, weekly and monthly options plays as well. So we have again straddles in here, short term at the money, in the money type trades, and then an overnight trading strategy as well. So feel free to give us a call, 1-800-448-2080. Just mention quick hits to the representative, and they will get you the discount applied, or you can text us at 513-589-3800 as well. And just to mention this, we did actually, like, this service just had a 100% winner this morning. Had a straddle on TripAdvisor. We just took 110% profit at the open that came through. So it's as little as overnight, as little as 1 week. We're able to take these volatile moments, and the market's going to be volatile right now. We're in the month of September. Um, September seasonality. A lot of people say, well, it's really bad. And I've always kind of went out and said, okay, well, beginning of September is actually really bullish. When you see the volatility is usually post September OPEX, which we just went through. And now we're starting to see this volatility pick up, right? We're seeing some of these big names kind of get hit. So we'll see how big of a pullback we get from that. If we get a pullback, this market's been relentless. I guess you could say we're getting one, but it doesn't right now. It's very marginal compared to what we usually expect in the second half of September going into October. Um, so just not going to probably get a chance to say thank you at the end. Thank you, everyone. If you want, give us a follow too on at Schaefer's on Twitter. Don't tell Elon Musk I still have the bird up there. It should be X. And then you can always go to our website. We always have great free news there. Talks about the options market as well. So it's a little bit different. We do standard macro things like that, but we also have option analysis right on our news page that our editors do a wonderful job every time. So let's pull up some charts here. And if you do have any tickers, I mean, feel free. Throw some tickers in the chat. We'll we can look at them as well. But I got a decent list here. All right. So OKLO, this name has been on fire this year. It is a nuclear power play specifically tied to OpenAI. And ChatGPT. So if you don't know, and this is just structure I kind of wanted to show you, right? So this has been a story all year long. So we had the move earlier in the year, coming into 2025, and then you got this huge corrective move. It came all the way back down to, around 1750 there. If you look at how it kind of operated coming out of this, you can see you got the hesitation at that 50% retracement level, but you had positive structure with your moving averages. This is the anchored VWAP level, so this purple one, and that is anchored year to date for me. And then, as you can see here, you got the move back up into that 100%. You'll get stalling action, but once, moving averages took back over here, got back through that 100% retracement, you know, you got a really good move. Where did it go to? It went straight to the extension level now. So, and that's exactly where it stopped. I mean, it's funny how these things kind of work, and they're not always exact. You got to give it some room and play. But this one, I mean, on the dot, came back, pulled back again to that 50-day moving average. You got a wick low, pretty darn close back to that breakout point, and held that 50-day. And now where did it go? I mean, you kind of started seeing like, okay, got a nice decent move up here, just ignored the 161.8 level. What do I say? When it ignores it, it's often a really, really strong move, right? You didn't even get really a 50% pullback from this candle move on the 15th, which, um, you got, yeah, I mean, that's probably about 50%. We can look at that if we want. Uh, let's just pull this up just quick. If anyone knows the hotkey too for Alt F, all right, let's go with it. All right, so even just kind of look, I'm gonna guess, right? Yeah, 50%. So you got about 50% retracement. So if you pull that down into like intraday charts, I didn't want to do it because I just didn't want to get off. But you know, look at that 50%, and then you held that structure, broke out again, and you moved. Now we blew through 261.8. We did come back through this morning because it looks like Goldman came out today with they were initiated coverage on it and it was neutral. I don't know if there was some other news or not this morning. Didn't get a chance to look because I am in the middle of moving, as I said. So, you know, this is kind of, looking for a pullback now. Where do we kind of expect where this pullback might come? Let's just take a look here. This is kind of interactive. So, like I said, I saw one ticker come in. Um, let's kind of just see if people put tickers in, but I do got one, and we're going to go over that for you as well. Yeah, so I mean, think about it. Like, where are you going to come back to? Now that you broke the structure, you broke the 261.8. Could it come back? Certainly, doesn't need to come back. But where would you probably start looking for kind of, decent moves? From that recent low to that recent peak, you could start looking around this golden zone here, 50 to 61.8. You're going to have this 20-day moving average right there as well. That's going to be pulling up into it. Would not surprise me to see that we kind of get one more kind of down day and you start rounding out, right? You never want to buy the first down move. Usually, I mean, the old adage is, at least wait 3 days. Again, could just fill the gap and go, but we're not going to be worried about that. It's a different trade. Right now, you just don't want to get caught kind of in no man's land. So, that's where I would probably first look to see, use that kind of as your spot. But, you could always get a full retrace, basically back down to that 1618, or not a full retrace, but back down to that prior peak. And, that would be, it's not really in a structure there, I guess, because that's the 78.6. But, if you get kind of an over move, a move lower, that kind of comes back up, you definitely could hit that. Oftentimes you'll see that big wick candle at those levels. So wouldn't surprise me that it hits that 0.786 if it fully goes back to that previous high and then closes up near that high. All right, we'll take that off. Okay, RKLB. We got 20 minutes, so I got a bunch of tickers left to show you, but again, feel free to put anything in there. And this is really for you guys. I mean, that's why we do it. So all right, Rocket Lab, I'm not gonna lie, was in this and it didn't work out so well on one of my 5-day trades. Even people that trade every single day, every single week, they don't all work, right? I was in a 5-day trade, got hit with that offering, and it crushed the option, right? Like it wasn't gonna rebound in those 5 days. It did rebound the following Monday. That's often how it works, though, right? So, but it was still profitable when th 2 out of the 3 of my picks, were profitable. You can't complain that you're getting out with a situation where, you have, it's still working in your favor. You're gonna lose some as well. So, all right, RKLB. All right, let's just see here. So recent low, recent high. So as you can see, you're at the 50, fib. Oddly enough, in confluence with the 50-day moving average. It's an area of interest. For me, I do look these candles. You might say, well, why are they red and why are they green here? They're not operating. They don't look the same as mine, and there's a reason for that. I do use a script that I've developed that tells me if RSI, MACD, CCI are like in a bullish kind of stance or if they're in a bearish stance. I don't really care what they're doing. I care what other people think, right? Like a lot of the times I'm going to buy on red after it's been in that territory for quite a while. But I want to know what other traders are seeing because that works to my advantage. So yeah, I mean, you really could kind of get this full retrace too, if we want to continue. So if we break down through this 50, I don't know if I would use actually the 618 that much. I would want to see a retake of the 50 level on ART KLB. But an area that would interest me, right, would be once we start getting down, kind of towards the 78.6 to the full retrace. We want to kind of see some of that negativity start unwinding. Candles start getting a little bit smaller, or if you get a capitulation candle that retraces, you get a long wick, right? It's showing you that buyers are kind of showing up. That's where I'd be interested. And a lot of people aren't going to like it because it's going to be below that 50-day moving average. It's going to be below that 20-day moving average, right? But you could easily get a retrace back up then for a nice move. Let's try to look at this just a little bit longer term too. Clean it up. All right. So let's take the low that was around the 200-day, go to the recent high. So say we start getting a really big correction going here. Where are you going to want to start looking at it? Into this golden zone area, right? The 50 and the 61.8. So say, the October bounce doesn't happen. I've had it happen before. 2018, you know, it literally kind of was like this, right? Like you got the move into September OPEX, and all of a sudden we got this big move lower all the way into Christmas Eve. Christmas Eve was literally the low on the market that year in 2018. So say something like that happens, and maybe it doesn't go all the way to Christmas Eve, but say we get a bigger correction than expected, maybe it extends out into October or even the beginning of November, which again, rare, but it does happen. This is where I'd be really getting interested long term on a name like Rocket Lab. And I like Rocket Lab. I think it's got huge potential. I've liked Rocket Lab since the teens. I mean, this has been a trading idea for mine for over a year now. I mean, probably a year and a half now. That's been a name that's been on my radar. And I've traded it multiple times. This is where I'd be really interested in looking at a longer term swing trade. You have a couple things going for you. So, say the sell-off gets violent, we get into mid-October, we typically see bounces from seasonality at those levels. So you'd get down here pretty quickly. You'd start looking around that 35 level. You could look at options, but you could also just look at shares and start legging into this thing as it comes down towards that 61.8, the previous high over here from February 2025, and this 200-day moving average. Again, multiple things in confluence. That's how I like to look at it. My guess is if we get towards that area, you start looking at the open interest, you're going to see people that are going to be sitting there, and there's going to be puts that are going to be building up at that level. And it's going to end up becoming very put supportive, would be my just thought here, because people are going to see this and they're going to want to kind of bet against this level or buy more stock. So you're going to probably see put sellers out. You're also going to see people hedging their position um, towards these levels. So you might have a huge exposure of buy to open, which is even more bullish, as long as it holds that level. So that would just be my again, that's a thought. That's not what's happening right now, but this would be the area that I'd love to see on RKLB for a longer term swing. Neo, haven't traded in a while, so but it's certainly a name that moves. I have sold a lot of credit spreads on it. It's typically has a lot of high IV. So that's one thing that I've done previously in this name here. As you can see, I do look at it. I do believe I sold credit spreads somewhere around here back in 2024 was the last time I traded it. But um, yeah, all right, structure. So you basically got the 100% retrace, right? Like I don't even have to pull up the fib tool to see that here. So I mean, right, 100%. So where do we go from here, right? You got the whole 100% retrace. That's not what you want to know. You want to know what's going forward. So let's take the low. Where can we retrace back to on a corrective move, right? If we break out, obviously, from this level, you probably just want to get long. It's a pretty big level on Neo's chart. Let's just pull this up. The next real big level on Neo, as you can see, old analysis here from this, would be around, this 925 to 97 or 950 level here. That's a pretty big structure level. You can see it's been a pivot. It's where you kind of get these big moves lower, big moves higher. This is probably, dead kind of trend line, so we'll just get rid of that. But you can see it came back up into the pivot, and that's where you got that big move lower. So again, you break 775, 780 here. You probably want to get long because there's a good chance we go up to that 925 to 950 area. But where can we get a pullback to? Wouldn't surprise me, right, if you get a pullback to here. And let's add the shorter term ones on too for all of you. And it would make sense, right? We could come back to this 38.2. You can see it's already kind of held a level there. It's also from a prior high that's over here. And at that point, my suggestion or my thought would be is if we do get a big corrective move, the 50-day would probably be right around that area. Another area would be this 23.6 area of interest, 20-day moving average, prior high on this move higher. So those would be the areas that I'd look for it. Keep tight stops on it, re-enter if you get a big move lower. That's kind of how I would look at this. It is an extremely volatile stock, so it's something I usually like to keep on short leash. I do apologize for seeing notifications down there, but we do have our teams. All right, so let's look at you know what? How I said everything works. Doesn't matter. It could be commodities. We have palladium here on the chart. As you can see here, where did palladium bounce from this recent fib level? right? Right at the 50 level. So you pulled back in, you kind of got this turn, you got this huge level from before. It kind of was right in the middle of the golden zone, I like to call it. And I mean, it's a pivot. There's multiple tops in this area. Again, multiple top failed. Top got a huge squeeze. Again, top pulled back. Now you finally got the squeeze, got the retest, came higher now. So where would you think about entering into something like Palladium? You'd start looking at that golden zone back near that pivot level. Came right into it, and that's where you got the bounce. You could always look at it and say, hey, I want to be safe. I want to be above that 20-day. You can enter up here. Use something like, that 50 fib or something like that as your stop or the previous low. And then look at, beautiful move. Nothing works goes in a straight line. You're gonna have to handle some pain some days. It's just how it is. But we have all kinds of other names here. Galaxy is another good one. Where to pull back to on this recent move. This is actually a mid-year pick for me. It was right around here that I was looking at it. So you got your low, your 50-day hold. You got your big move higher up to 33, pulled all the way back 61.8. And then what would you do? You wouldn't enter necessarily at that 61.8. You'd want to wait for a reclaim, right? So you could use like the 10-day and the year-to-date anchored VWAP right there on a close above it, or the 20-day. Really that's kind of suspect. So I probably would have used the 20 anyways. What'd you do? You literally reclaimed a huge move. It's showing that buyers are showing up. It's going above the 50, the 20, the 10, the year-to-date anchored VWAP level. It says, hey, let's take this bet. Have a stop down around 23 there, 22. Look at those wick lows and just play this out, right? You got a huge move higher, went through the full retrace. Now we're back below it. Oracle, huge move on earnings, right? Um, where did it go to though? I mean, you look at this old 2024 high, the pullback to the 2025 low, structurally came up to the 50% retrace, moved higher after a little corrective move off that VWAP. You got through that 100% level. Where did it kind of correct? The 161.8 extension. You got to move lower. Once we got back through it, and my guess is, you could probably find some fib sequence right there. Where did it go right to on that huge earnings beat? 261.8. That's where you kind of got the failure move and the consolidation. Not that it can't break out and go higher. You just get the stall, you get the pullback. NBIS, another big mover. And this is one where it's like, hey, this one super strong, still holding despite volatility. If this holds the structure, this is something that's probably going to go much, much higher. So watch for that. This can be used on IPOs. Um, you know, uh, Carmen, I think, was one. Yeah, so I mean, would 100% retrace here, breakout, where did it kind of start stalling? 161.8. You did get a decent move higher, came, pulled back, moved back up. I mean, it's a decent one. I think CRV was even better though. That one's a little bit more sloppy. Or CRWV, CoreWeave. Yeah, CoreWeave was pretty solid. So you got the big move back. Where did it retrace towards? You got the 50 level. You got a huge move higher. Now, eventually it did pull back to the 61.8, and that's where you got the low, the recent low. So, got through there. That'd probably be your trigger point if you use moving averages, or you can take a kind of a structure here, previous low. You got the move higher, so you could say that's a double bottom, and you could try to take a gamble against that 61.8 there on that, since you do have structure as well. IREN, IREN. Um, just kind of see, this will also show you how these extensions, right? You kind of blow through them, you get this retest. This is from the 2024 high to the 2025 low. You got this move, really ignored that 100% retrace, came higher, pulled back to it, very strong, reclaimed those moving averages, went up to the 161.8, went through it, didn't stay below it, held it. Again, next move straight up. Again, stalled for a second, went above, held, reclaim, and then moved higher. I mean, it's following a pattern. Again, holds this 361.8, it's going to go to the next one. Just a strong, strong mover. Doesn't have to always be those, names, but look at here, Intel. I mean, a dog, for the last few years, but it's been getting some, volatile moves recently. Look at the again 2024 high, 2025 low. Where did it kind of stall out on a lot of these rallies? This one perfectly at the 50%. Anytime it kind of neared it, you saw that. But huge range break. Now you got this move higher, pulled right back to the 61.8. Now went up to the 78.6. Probably gonna, if we can kind of hold this up here, probably gonna get a full retrace finally out of it. Google, bigger name. Where do we think, like, if we did get a bigger correction, where we'd start looking at? Probably around these previous highs here, around that 50 fib level, is what I would look for. Just a few minutes left, so we'll go through some more. Oh, sorry about that. Firm. All right, so again, you kind of see here how it kind of, where we'd look for like a retrace back. Where was I looking on this one? Oh, yeah, this is why I was looking at this one. Bearish example for you guys. So we took it from the January 2025 low to the February high. Once you broke this structure, right, there's a pivot level here in red. I wanted to kind of highlight that. You kind of like, okay, you could have targeted the 100% retrace there. Once it broke that structure, it did bounce around that area, but that's where I would be looking for, kind of like on a structural move, and I had these moving averages starting to move lower. But where did you get it once you broke that 100% level? It went right down to the 1618 on the bearish side. Clock, I put that up because I just wanted to show you. I mean, it works on anything. Not a lot of people are trading CLAC, CLA Corporation. It's a semiconductor as well. But again, look at that. Previous high to previous low. Where did it stop? That 1618. All right, let's take a look. NTSK. Not a name I've heard of, so brand new, and you have just a few minutes left. So, okay, how about we do this? Break this one down a little bit more. 65-minute. That's why I haven't heard of it too. IPO, right? So let's place a VWAP. So right now we're still underneath that kind of that opening 1 hour candle VWAP level. And then let's look at structure. All right, so pullback is into the 0.786. So this is, it's already actually had a full retrace on that candle. That was pre-market though. So kind of how I would look at this is you're kind of approaching levels that, hey, this could bounce, right? Oh, sorry about that. We'll get that back. Let's pull here. All right. So think about this. This is the 78.6. If you get through this anchored view app levels, how I would look at it is I would look for a move back up to the 25, right? That's the safe bet. You have kind of a structure here. Um, you know, it, you do have a little bit of a pivot here. So, that's tough, right at 38 too. But it kind of outlines it. Again, you get through the 50 here. Now you really got blue skies kind of heading up to the 618. But look how beautiful this actually looks on the retrace. Where's the retrace for the 618? It's on that big move lower. Where's the 78.6? It's at this previous high, in pre-market data. This structure on Fibonacci sequence, it literally lays out every area that you could probably see resistance on a move higher. So I literally just pull this up and I would trade against these levels and just make sure, hey, if you're stalling before you go, but these are levels that you can look at like as profit levels too, right? Like you could look at this and say, hey, I'm going to structure this and say I'll take 1/5 at every level all the way back to the 100% retrace and we'll reevaluate or something like that. So there's only 2 minutes left. I'm not sure if the next speaker's up yet, but let's look at open. This is something a lot of people have been trading. It's obviously in the news a lot. And we can just kind of just see, okay, so when that initial news kind of came out and Twitter started getting all over it, we got this move up to $5. let's just look at how you could have used the retrace. You get up to the 100% retrace, you go to the lows. Right there, you had the year-to-date anchored view app. So it's a great level to think about structure. You kind of had this, bottoming pattern here. You could just lay, on there as well. Um, and then where did it go to? I mean, the rally right away went to the 618, kind of held that 50 level. Once we broke out, I mean, where does this go to? 1618, a spot you could use as a target to take some profits. Because you don't want to get stuck holding the bag in high momentum names.